Welcome to everyone. This week video will cover the SP 500 market for the week of November 24, 2025. Before we start, make sure you read carefully the disclaimer. In my last update, I mentioned 6,500 was a key level to watch for the formation of the next 40-week cycle. Let's see what's happened since my last update and what we can expect for the next few months. Let's start by the 18-month cycle. Despite the 5% correction since his 6,920.34 October 29 high, the SP 500 still in bullish mood. He's still trading well above his cycle line or FLD. The low for this cycle is still expecting between September and October 2026. The 40-week cycle. The October 29 all-time high is confirmed as the 40-week cycle peak. This peak occurred on the right part of the cycle, anticipating a moderate correction. The maximum target for this correction should be his 40-week cycle line. Also, there is a very high possibility the 40-week cycle low form early than expecting in January. The possible best time for this cycle to form his low could be during the first 2 weeks of December. We will have more clue about the time of this possible low formation by analyzing the shorter cycles. The peak for the second 40-week cycle since the last 18-month low in April, still expected around May 2026 and his low between September and October 2026. But again, a more precise timing will be available by analyzing the shorter cycles in the future. Let's see now the 20-week cycle. For now, the best place to label the last 20-week cycle is still at the end of July. Following this statement, in my last update, I was expected the second 20-week cycle low to form on the week of November 17, last week. To maintain first nominal average, I also mentioned the possibility of a longer second 20-week cycle. The length of this cycle can be as long as 23 weeks, which give us the week of January 5, 2026, as possible date for this 20-week low. And at the same time, due to the Hurst rule of synchronicity, this will be also the 40-week cycle low. If the next 20-week cycle has formed last week or in the next 2 weeks, this will confirm we still have lots of bullishness in the US market. Technically, this 20-week cycle should cross below his cycle line to provide a downside target, which should be around the 40-week cycle line. If during his low formation, the SP 500 finds support on his cycle line and rebound sharply, this will confirm the SP 500 bull trend is still intact. On this week update, I will add the 18-month cycle roadmap. This roadmap will help us to know where we are within this 18-month cycle. As cycle line, for the trading signal, we have to use the 20-week cycle line. The point 0 on the bottom left is the last 18-month cycle low. The blue line represent the ideal pattern for the SP 500 price when 3 cycles are combined in balance market. The red dashed line is the 20-week cycle line or FLD. For more detail about the roadmap, or to know how to build the cycle line, I recommend to visit my website, tradingmarketcycles.com, where I have different articles explaining in great details how cycles works. As mentioned above, the point 0 is the last 18-month cycle low formed on April 2025 with a 4,805.34 low. The market crossed above his 20-week cycle line, or FLD, on the week of May 11 at 5,847, providing a potential 6,859 upside target. The SP 500 formed his first 20-week cycle peak during the last week of July, with a 6,427.02 high. Then, as expected, the SP 500 declined on his way to form his first 20-week cycle low. At the first 20-week low formation, technically the SP 500 market should find support on his cycle line before bouncing back on his way to the 40-week cycle peak. But the SP 500 market was so bullish, he formed his first low 6,212.69 well above his cycle line, then bounced back to form his 40-week peak at 6,920.34 on October 29. Meeting his 6,859 20-week target, triggered during the week of May 11. For the traders who enter the market at the May trading signal, this is 1,012 points or little bit more than 17% of profit in little bit more than 5 months. After forming his second 20 in the 40-week peak, the market usually crossed back below his cycle line, providing a downside target. For now we are here. But again, due to the bullishness of the market, there is possibility the SP 500 will find support on his cycle line instead of crossing below. After crossing below his cycle line, technically after the second 20-week low, in balance market the SP 500 should cross back above his cycle line, providing the last upside target for the 18-month cycle peak. After his 18-month cycle peak, the SP 500 should cross back below his cycle line, providing a downside target. Before reaching his low, he will form a first low before rebounding toward his cycle line, without crossing above, using it as resistance. Then resume his decline on his way to his fourth and last 20-week cycle low, completing the 18-month cycle. When we will now the 18-month cycle has formed? Since the cycles in stock market are synchronized at their lows. When the SP 500 will cross above his 80-day cycle line, this will confirm the SP 500 18-month cycle is over. A roadmap can be built for any cycle length from the 10-day to the 18-month cycle. With two positive trading signals since the beginning of the year, the 20-week cycle maintained 100% success rate. The 80-day cycle. Last 80-day was on October 10th. This cycle was the first 80-day from the last 20-week cycle low. Knowing there is two 80-day cycle in one 20-week cycle, and the second cycle is usually weaker than the first one, we can expect the SP 500 to meet his 6,386.60 target triggered on November 18th. When the SP 500 market crossed below his cycle line at 6,653.97, the potential profit for this signal is 311.37 points or 4.67%. The time target for this 80-day cycle to form his low is December 17th. On November 17th, the SP 500 crossed below his 80-day cycle trend line, confirming the October 6,920.34 all-time high is at least the 20-week cycle peak. On the 80-day cycle roadmap, we are here. With 4 positive trading signals out of 5, the success rate for the 80-day cycle is 80%. The 40-day cycle. The SP 500 provide a new target on November 18th. When the SP 500 crossed below his cycle line at 6,700. For a potential 6,480 downside target, the last week low is certainly the 40-day cycle low. If this statement is correct, we can expect the next one to form his low on December 22nd. In this case, the market should rally up to December 2nd. Before resuming his downtrend, on his way to his 40-day cycle low. By crossing below his cycle trend line on November 17th, the SP 500 market confirmed the 80-day cycle peak on October 29th. With 3 positive signal out of 3, we have 100% success rate for the 40-day cycle. In conclusion, the S&P 500's multi-cycle analysis reveals a market in transition, balancing bullish momentum with technical correction requirements. While the 18-month cycle remains healthy and above critical support levels, shorter cycles suggest temporary weakness ahead. The most critical period appears to be early December through late December, when multiple cycle lows may converge. The roadmap approach provides systematic guidance for navigating these fluctuations. With proper risk management and cycle awareness, opportunities exist for both long-term investors and active traders. For more details, visit tradingmarketcycles.com. If you found this helpful, please like and share this video, subscribe to stay updated with my weekly trading insights. Thanks for watching, see you next week.